So let's talk about loan estimates. But first, let me say, hey, this is Valerie. I'm a loan originator, and I help people achieve the American dream through home ownership. So what you see on your screen here, this is a loan estimate. I got this from the CFPB website, and it kind of breaks down everything as well. But let's go over this. When you first receive your loan estimate, you need to understand that this is just an estimate of the fees. This is not exactly what you're going to have to bring, but it is a rough estimate. Until we collect all the invoices and receipts that transpire, and we'll get to all that on the next page, this is just, it is what it is, an estimate. So as you're looking through, you want to check and make sure, check the date. You want to make sure that your name is spelled correctly. You want to make sure the address is correct for you and for the subject property. This is the property that you are putting an offer in. The offer's been accepted, and now we're moving forward. There's the sales price, and then up here you see that these are the loan terms. So you need to understand, make sure it's 30 years or however many years that you want to finance it for, 25, 20, 15, 7, whatever. You want to make sure this is a purchase or a refinance. The next thing down is going to be your product. Is it a fixed rate, which means your rate's going to stay the same for the entirety of the loan term, like above 30 years? Or is it an ARM? ARM is an adjustable rate mortgage, and we'll get more into that another time. Loan type, is it a conventional? Is it FHA? Is it VA? Is it USDA? What is it? You may be in one of those areas where you can qualify for any of them. So basically it's going to come out to what works out best for you and your family. And for most people right now, that's going to be focusing on what the actual payment is. Let's get to that later. Then it's going to be like your loan ID number, and then right below that is if your rate is locked. If your rate is not locked, that means it's just floating and it could increase. Once your rate is locked, it is locked in for a certain period of time. And that over there you'll see is until, and then there's the date and the time in which it expires. So your loan must close by that day to keep that rate, or you'll have to pay for an extension. Now let's get into the numbers. So you've got your loan amount, you've got your interest rate, and this is going to be your monthly payment with just the principal and interest. And hold that thought. You'll want to see if the loan is going to have a prepayment penalty. So maybe if you come into a little bit of money and you're going to pay it off soon, you need to know how much that is going to cost you. Then you'll also want to check and see if there is a balloon payment required. Always make sure that says no, unless you're in a different type of program somewhere else and that works for you and what you want to do. Not for the standard buyer. Look at payment calculations. This is going to be very important. So you get your principal and interest. This is the amount that you will pay. Now, this is not your loan estimate. This is an example. Principal and interest. Mortgage insurance. Escrow. Escrow is going to be your homeowner's insurance, your property taxes. And then you have your total. We'll add those three together. This is what your payment's going to be for years 1 through 7, if this was your loan estimate. And then if it changes on year